back to Money Channel. I'm your host, Erin, and today I'm going to talk about my startup portfolio on the platform WeFunder. Yes, you did hear me correctly. I did say startup portfolio. Okay. So during 2021, I ended up buying several startups. And yes, I was addicted to buying on credit card, but not buying on credit card like, oh, we're going to buy purses and, all that stuff. No. I wanted to try to make money using my credit card, try to leverage debt. Okay. Yes, I would not recommend doing this in particular with startups because with a startup, you don't know if it's going to succeed or fail. So you are taking a huge risk. Additionally, please keep in mind, I'm not a financial advisor. You must do your own due diligence. And also, just a note to add, most startups, you have to be what's called an accredited investor, which means you have to have over $150,000 or more in assets. Okay. So if you're not an accredited investor, a lot of these platforms may be closed off to you, or you may not pretty much be allowed to participate. Okay. So, in this instance, keep in mind with startups, you could lose money. Okay. So, due to that reason, you have to act like this portfolio does not exist. You have to act like pretty much this whole entire investment platform does not exist. If we are in a recessionary environment, if you lose your job, if there's a global recession at some point, you have to act like this does not exist. This cannot be your main source of income. This cannot be your emergency backup. Okay. You are taking on this risk knowing half of these may fail and the other half may succeed. And yes, with startups, they go through rounds, okay, several rounds of funding. So maybe you funded the first round, then they're saying, okay, calling all investors, we have a second round. And that second round could be a year from now, it could be 5 months from now, and then sometimes they'll even go through a third and final round of seeking investors. Okay, so let's get down to business. Bear with me for a moment, guys. Now we're getting down to the nitty gritty. Okay, so this is what my startup portfolio looks like on WeFunder. So we have here, my value is $865. Okay. My investment was only $602. Okay, invested. And then I have an unrealized profit or gain of $263, and nothing's realized, meaning nothing was sold yet. So now I'm going to talk to you about these companies. So Hivo, if we need to know more information, okay, we just click on these. Okay, so this is what I invested in: Hivo at $200, Tap Systems at $457, Solar Space Company at $100, and Jetto Terra at $108. So why did I invest in these startups? Is because I actually liked the idea, guys. Okay, so for example, Tap Systems is where a lot of companies, especially during that time of COVID, they were switching to virtual space, virtual AI. Even Zuckerberg was talking about it. And so, if you either one, have a disability, or two, you just want to use a cool device in the virtual realm, it's pretty much they like you put on goggles, and you have like an attachment to your finger, and the attachment to your finger is like a virtual keyboard. Okay, that's why it's called Tap Systems. So it's like a virtual keyboard. You wear it on your finger and it brings up the virtual keyboard and you tap in air. Okay, and they have many of those. Actually, they as far as I know, they have a product on Amazon several years ago. I didn't check if the newest product is out on Amazon, but they did change the product from when I invested in it originally. you have to wear it on your finger like a ring. This one, the newer one, it looks like a Bluetooth device, but on your finger, like a also like a ring. Okay, now Solar Star Space is a company that wants to put pretty much like telecommunications and Wi-Fi hotspot in space. Okay, so I was like, okay, that sounds like an interesting concept. For me, I was thinking something like Starlink. So I was like, okay, I can see something like that, where it's telecommunications, satellite, okay, Wi-Fi, all that stuff. Jetotera, I really love the idea, especially during that time. And we are actually probably 5 years, in my opinion, and I could be wrong, but I think in the next 5 to 6 years, we're going to start seeing more eVTOLs. Okay, and that's the real name for it. What is an eVTOL? An eVTOL is a spacecraft, but they have like about 2 to 3 different designs. So, for example, one design can be like a flying car, like literally a car. Two, the next design could be like imagine a helicopter, like that would be the second design. Three, imagine like a small, tiny jet plane. So eVTOLs are going to be pretty much like taxis, but in the air, and that's what our future is going to possibly look like in around 2030 to 2035 or 2030 to 2040. So I was like, hell yeah, I'm investing in that. Like, I don't care if they don't make it. I hope they do, but just the idea is really awesome for me. There are actually several companies doing this. And I think one of them is profitable as far as I know, one or two of them. So, Hivo, let me check on the profile because it's been a long time since I've accessed this, guys. So we're going to go to the company page to see what Hivo is about. Oh yeah. So wireless charging, guys. So I'm totally into wireless charging. So anything that's like AI related tech, I totally wanted to invest in. So Hivo is a wireless charger for cars. So or for EVs, I should say. I just want to show you guys the Jetotera page. So this is what the page looks like. As you can see, they raised $2 million from investors, from 2,523 investors. And they were last funded April 2024. Okay. So if we go into like the company details and highlights, it says here, world's only jet propulsion solution using fluidics. Then it says here 30 dB quieter and 2 to 3 times faster than helicopters and vertical or eVTOL aircraft. Awarded 119 patents with 100 plus pending prototypes flying today. Number four, 4.1 million in revenue with U.S. military, 12 million invested into R&D. Okay, so I'm just going to go ahead and play this right now. Guys, you may not hear the sound because I turned the volume off. So I just want you to see, like, get an idea of what I'm dealing with right here. So sorry, guys. And then this is more about the company. So 5 says leadership from GE Aviation, Collins Aerospace, US Marines Corps, and Morgan Stanley. 6 collaborations with Northrop Grumman and Pratt and Whitney. So, guys, that's really big. If they have a collaboration with Northrop Grumman, they make the U.S. Defense airplanes and anything dealing with defense. So that's extremely big. Then, if I scroll down, you will see like about the team, and then more information. So that's what I invested in out of the startups on here. So I'm just going to go back, guys. Okay, now I'm in the main homepage for WeFunder, and this is what you can actually invest in. So it has tech, it has, as you can see, like you can invest in a social app, you can invest in healthcare, hardware, science, so like replacing fossil fuels with fusion energy, developing a cancer treatment designed to help tumors vanish. So you can actually invest in what you like, but again, keep in mind that these are startups. So many startups do, in fact, fail. So once you put your money in, you have to expect pretty much that profit may not be like you may not gain profit from it. Okay, you actually may either just it's not profitable and it goes bust, or you just, if it is successful, it'll go through many rounds, and then eventually a bigger company will buy it out or buy it off. So for me, like I like this idea of a hydrogen on demand portable generator. Like I like this idea, to be honest. So then they have entertainment, subscriptions. So that's what they have on WeFunder. So I'm just scrolling so you see. So once again, pretty much act like it's play money. So for example, if somebody's addicted to going to the casino, then don't go to the casino. Like it's probably best to buy a startup than to go to a casino. If you are addicted to, for example, buying lottery tickets, it's probably best to buy a startup company or startup like shares in a startup than to buy a lotto ticket. Like I'm just saying that to be direct, guys, because the chances of winning the lottery is very slim. The chances of winning big at the casinos is also really slim. So some people are addicted to like maybe blackjack or something, maybe the slot machines. Like honestly, I would rather just buy a startup, and if it goes bust, oh well. At least there's uh a chance versus like, and this is just my opinion, I feel like maybe there's a 50% chance or a 40% chance that a startup is successful versus like a 3% chance of winning the lottery, a 3% chance or 5% chance of hitting it big in the casino. So that's the way I look at it. Don't use like your main source of income for this. If you have a side hustle, if you somehow received a bonus from your job, if you received, for example, like tax returns, then yeah, I would say, okay, go ahead. But if you're just living paycheck to paycheck, trying to make ends meet, don't do it. Don't invest. This is only for a certain type of investor, because again, not many startups are successful, and half of them go bankrupt or bust. So this is what I've got for you guys. If you like my channel, please subscribe. Ciao.